Through the process, what's considered the cost? There's a few pieces that are considered the cost, right? So we have the purchase price, but normally with large assets, there's reasonable expenditures necessary to get that asset up to use. So a good way to think of this, I think cars are easy for everyone to get, especially in California, where most people drive or have driven. To buy a car, normally you have the purchase price on the car, but then you might also have taxes and fees related to the car, registration costs, and then you might need to do some repairs. If you ever bought a car off Craigslist or a used car, you may need to get new tires, you may need to get fix up the engine and do some significant repairs before that car is actually operational, right? And so in that case, any expenditure needed to get the asset up to use, to get that car drivable, will be capitalized or included in the cost of the car. And so we cannot expense those. And that's something that I've seen a lot of companies mess up, even professional companies. So that's something very valuable to remember is that all those costs before the asset is actually usable are capitalizable, which means that it is going to be part of the asset. So if we have repair costs or engineering costs or machine shop charges that we get an invoice for, we shouldn't just assume that they're expensed. We should ask, well, did any of these relate to bringing an asset to usable condition or to prepare the asset for intended use? And if the answer is yes, then it will increase the asset's value. So an example for machinery and equipment generally include taxes. This can include registration fees, transportation charges that ship to us, insurance, installing, assembling, and testing it, and the purchase price. So a lot of pieces of the machinery can be included. Buildings, we might have title fees, attorney fees, taxes, brokerage fees, cost of construction. Land improvements might be paving a driveway, building a fence, cutting shrubs, building lighting systems, and then land improvements themselves are actually depreciated over the useful life of the expected useful life of the improvements. Land is something interesting because land we consider don't depreciate. Land isn't depreciable, so we'll talk about land itself a little separately, but we'll include in the cost of the building. And then land costs include property, survey, title, real estate commissions, purchase price, and title insurance. And the land is not depreciable. So take in mind, though, this is all before it's ready for use. So some of these pieces, after, we'll still be charged property taxes after the land is available for use or usable, but then afterwards, those will be expenses. So it's all the timing of when we put the asset into use is really key here, and that'll be in your questions. I can also see an easy trick question where we ask what depreciation expense on land is and give you a lot of fact patterns, but then remembering that land is not depreciable. We expect land to last indefinitely.